In this video, learn how a senior trader from our trading firm became a consistently profitable trader, so you can too.
Hi, I'm Mike Bellafiore, co-founder of SMB Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. Click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community.
In this video, learn the path a now senior trader took to become a consistently profitable trader. Let's get to work on sharing these important trading lessons. They're as good as gold, so you can grow your trading account.
Good afternoon, everyone. So I'm Ryan, a senior trader at SMB KTG. And in this presentation, we're going to go over step by step, really, how I became a consistently profitable trader. So from the beginning to when I just started, to some challenges that I faced, to when things started to uptick, and then when finally I achieved consistency and profitability. So the reason why and how this presentation came about is I tweeted just over a week ago after I received a lot of questions regarding consistency and the learning curve. And you can see my tweet there. I said the following. I said it took me over a year until I was consistently profitable. Then came sizing up and refining. No huge home runs, just improving and growing 1% each day and allowing things to compound. And this is my equity curve, which I was happy to share. And you can see up until July 17 through to August, October, there wasn't much going on. That was experimenting. That was the learning curve. Trading with small size, and then finally one finds their niche, as I did, and that's when I placed most emphasis and focus on what showed me promise in the beginning, and that's when I started to refine, adapt, further my knowledge in that niche and size up. And later on, and especially this year, this is when things have really started to compound. And I also wanted to include this because it just really summarizes what I'm going to be speaking about in 3 small paragraphs. Number 1, where did it start? I hate losing, and that's why I don't necessarily go for those huge home runs and those big drawdowns. And early in my career, I decided I wanted to cut out everything that wasn't working and only trade what was. And once I was consistently profitable, only then did I focus on expanding my stock selection and playbook. 2, there's no shortcut to trading. You have to put in your 10,000 hours and treat trading like it's your own mini business. You want to achieve consistency with certain strategy type of stocks, and then, only then, look to add another strategy to your business, another stream of income and revenue that leverages your current skills. And it's a process and it takes time. And lastly, collaborate and learn from people who are doing what you aim to do. Be open-minded. Twitter is a really great resource, and for those of you at the firm who are lucky to be there, don't be afraid to ask questions. You're surrounded by people that want to do that are doing what you want to do, so take advantage of that. And Twitter, again, it's flooded with successful traders and coaches who share free, valuable advice and lessons, so take advantage of that. And lastly, if I hadn't received the mentoring and been open-minded and asked questions, I wouldn't be trading today.
You mentioned that you hate losing, so there's different ways to interpret that. There are some traders who really don't like having too many negative days, and they need to craft their trading so they don't have many negative days. There are people that are just super competitive, and what they mean by I hate losing means they really just don't like losing at anything. Can you clarify what you mean by you hate losing?
So in the beginning, I hated losing because I was competing with myself. And so whenever I would have a bad day, it was because I hadn't prepared well enough in order to manage my risk or my loss, or I didn't know how to trade what I was trading the best that I could be. And so that's why I decided to focus only on what showed me some success, glimpses of success in the beginning, and take out some of the other plays and potential playbooks that I was working on at the time, because I was competing with myself and I didn't like trading the unknown, if I could put it that way.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
In the beginning, when I first joined the firm and the trading world full-time, I came into the firm on day one and I assumed I knew nothing. I wanted to learn from those who were already doing it and had achieved what I was looking to do. The reason I did that is because I didn't want to come with pre-assumptions and come with the strategy and look to expand on that. I wanted to rather take snippets from XYZ trader who was already doing it and had the right habits and processes and disciplines, and I wanted to start fresh and get each step correct along the way. Failure wasn't an option. If someone else was doing it, then so could I. That's what I told myself every day, especially during the tough days and the downs, as you experience in your first year. It's just hang in there, because if someone else has done it, then so could you and so could I. You have to be determined, resilient, and persistent. I noticed that those who assumed they knew everything in the beginning were the ones that often did not make it. You have to be open-minded. I think that's, I couldn't be more place more emphasis on that. Open-mindedness is a trait that I see all of the great traders at the firm. They have placed so much emphasis on that in their trading and their processes. Manage expectations. It's very easy when you first start trading, and especially with the trading community and seeing large numbers out there, to want to be the one that comes in and hits the ball out the park in your first year. That's not managing expectations. Rather, you want to understand that there's a learning curve, and the learning curve is real. It's not a 9-to-5 job. You need to put in the hours, just like an athlete would, if you want to make it and be part of the 10% that make it as successful traders. And so managing expectations is super important, and it's in fact one of the first things that my mentor said when I joined his team. Develop the right habits, process, and routine. That in itself could be a full presentation. It is super important, and I know Dr. S and Bella have a lot of material online where you can dig a little bit deeper into that. Focus on laying the groundwork for a solid foundation. That is everything I've already mentioned above, as well as technicals and fundamentals and the tape and recording your screen and putting in the hours so that you have a solid foundation. And don't be afraid to ask questions. Often when you're starting out, it can be quite intimidating to get in touch with successful traders that have been around for a long time, but they were also once junior traders or new traders just starting out, and they did the same thing. So don't be afraid to ask questions. It's the best way to learn. It's the quickest way to learn, and definitely pick the brains of traders that are doing what you want to do.
Ryan, can I dig deeper on one important point you made here? So you're very close with Shark and Raf, two huge traders now. How do you, as you're coming up the curve, you're a competitive person, you want to be a terrific trader, when you're seeing them have huge days, when you were seeing them have bigger days than you, how do you get yourself to focus on what you need to do to develop for your career and not lament that you're not making as much as them?
It's a great question. What I do, and I'd say what I did 2 years ago when I really started to get a bit closer with both of them, is when we would trade the same stock and of course trade it differently because we're all different traders. I would first want to understand why they got as big as they did in certain spots, what they saw that I perhaps didn't. And that was step one, is their thought process behind a trade, because I may have seen that trade as a B trade, they saw it as an A trade for reasons that I did not even think of at the time. And so first step was understanding their thought process, and then understanding how they manage their size and their trade going forward. And in order to get closer to their size and the success they have in these trades, for example, it's speaking to them and speaking to yourself and Dr. S and coming up with a process that suits me as a person and a trader to responsibly size up. And so that's something I'm working on now. And something I've spoken with Shark and Raf about is differentiating between your B trades that show up each day and your A plus trades. And so that looks something like identifying trade XYZ, and those 3 trades of the month were the standout trades. And on those trades, one should be risking 30 or 40% more risk, for example, than you were on your B plus trades. And it's going over that, it's visualizing it, and it's really just knocking it into your head. And the first 2 times you'll experience some speed bumps, but it's repetition, and it's training your mind to think that way, so that when you see it on the screen, when you're anticipating a trade for 1 or 2 or 3 days, you're able to hit the button, hit the size when that trade plays out. And that's something that they do extremely well. They've trained themselves to do it, and it's something that I'm beginning to do and showing some promise in, but it takes time. And so it's that mindset and that mind shift, and that's something that they've achieved, and I think all traders would like to achieve that. And to go into some challenges that I experienced when I first started, really the first 1.5 to 2 years. First of all, it goes without saying, but if trading was easy, everyone would be doing it. So you need to understand that it is tough, and that, like I already mentioned, it requires a lot of time and perseverance and dedication. It's like learning to walk. First you crawl, then you fall. It's like learning a new language. And a challenge that I experienced is when you spend hours, days, weeks, weekends working on a strategy that shows promise, only to find that there is no edge, it can be quite disheartening. And so when you first do that, when you start trading, you may find a particular setup that you like, you may back test it, you may forward test it, only to find that it just worked for that week and you got lucky, for lack of a better word. It's very important to put your ego aside immediately and get back to work and try something else. You don't want to dwell on failures with trading. Everyone's going to fail. You just want to get up and move on. Losses are part of the game. Don't let them discourage you. Let them motivate you. I struggled with that too in the beginning. I was, in a sense, afraid of losses. It would discourage me. And it's about training yourself and your inner coach to let them rather motivate you. And that's the next point. Train your inner voice to be your inner coach. How you talk to yourself matters. And it matters immensely. When you're in a trade that does not work well, are you going to beat yourself up with that little voice in your head? Or are you rather going to be proactive and say, well, next time perhaps I shouldn't do X, I should do Y. Or next time I should go in with half the size until I get further confirmation. And it's about being constructive and proactive in real time. That in itself will speed up the learning curve. You want to set realistic goals in the beginning. You don't want to set yourself up for failure. Again, the learning curve is real, and you will likely need to make sacrifices while you are in the development phase. So that may mean less recreational time on the weekends. You want to spend more time behind the screens and in the office to speed up the learning curve. And you can't copy a successful trader. That kind of goes in with, if trading were easy, everyone would do it. Everyone is unique in their own way, and I think so is trading. and you really need to find your own niche, as we all are different. Guys at the firm, we all trade the same stocks, but we all trade them quite differently in terms of time frames, hold time, entries and exits, how we take profits, and that's because we're all different people, and we see it a little bit differently. Sizing up is a challenge. When you see bigger numbers, bigger winners, bigger losers on a screen, it is challenging, especially when you get comfortable with a certain size. What it takes is for you to coach yourself with that inner voice, as well as good mentoring, a good coach, a good mentor to remind you. And what helped for me specifically was to remind me why I'm doing this. I'm doing it to be successful. I know I can be, to have a growth mindset. Trading definitely can consume your thoughts, especially if you're performing poorly. It's easy to beat yourself up over it. And so that's why it's so important to devote some time towards your friends, relationships, your health, hobbies, and interests. And this is something that...
Ryan, can I follow up on one thing you said, which I find fascinating? So, and it relates back to how close you are to Raf and to Shark. And Raf and Shark have either surpassed 8 figures this year or are knocking on the door of it. And if anyone's knocking on the door of it, certainly they're going to do it. So you have these 2 8-figure traders in a year, and you are as close to them as anyone, and you can see their trades in real time, and you can talk to them in real time. What do you mean you just can't copy them? And when you explain that, all right, so why you can't copy them, but what can you extract from them that's super important? For example, I think it's super important for someone like yourself to see the setups and the trades that these guys are taking, and for you to be able to understand the variables that go into them. For example, I think it's super important for you to be able to see that it's possible to make as much money as they do. I think it's important for you to be able to talk to them about why they're getting into trades and why they're managing the trades the way that they are. And then you take that information and you figure out the type of trading that you can do, and you craft it into the type of trading that you're going to be successful with. For example, you may be able to get in the same trade as Raf, but you may not be able to hold it as long as he does. But you could create some trades that really, really work for you. For example, you may not want to trade a short setup the same way that Shark does, but you may want to take the same trade. You may want to take the same direction. You just may want to get in and get out differently. But I'd love to hear how that experience being around those 2 guys was for you.
Well, it's actually interesting, and it's something I've spoken to them about quite a bit. And in terms of copying them, it's and the size that they put on, again, it goes back to the point of it's all a process. And when I speak to Raf and Shark, I was reminiscing with them quite a bit. And I was talking to them about how when I joined 4.5 years ago, what I was seeing them do and the numbers that they put up versus what they're achieving now. And they both, said to me, obviously you want to have that growth mindset and keep pushing yourself, but it's very easy to see someone put up these big numbers and focus on that, especially if you're someone from the outside and you're not close with them, but one can often forget the last 4.5 years that they've had, and how each year progressively and incrementally they've improved each day. And so that's what they and Swang too really reiterate all the time, is focus each day, each month, each quarter, each half, each year on improving on the previous year. And if you keep showing that consistency and profitability, you will achieve what we have this year, but in 2, 3, 4, 5 years time, just as we did, because it took it took them time too. And so and it's amazing because at the level that they're at, they still discuss and place emphasis on the basics, and that's the process and the habits and the rules to have each day. And naturally, you will size up over time. Next point, understand what sets you off, what may put you on tilt. For example, if I got a poor night's sleep, if I was competitive in a friendly manner with someone else, for example, and they perhaps did better than me, and I felt like I had a point to prove now on a particular trade. If I missed a meal, if I had an argument with a girlfriend, understand what sets you off and identify and understand the feeling that comes within when you're kind of going on tilt or a little bit on edge behind the screens, and try and cut that off before it affects how you trade and your trade management for the day. Trading is not about being right or wrong. Put your ego aside and focus only on positive risk-reward setups. If you're going through a slump, size down and put up some green days. Rebuild your confidence. It's so important to do that. Don't look to bounce back after a slump. If a slump for you is 1 per week or 1 per month or 3 bad days, everyone's different, but people want to bounce back immediately and they want to make it all back. It's very important to size down, put up some green days, and rebuild your confidence. In the beginning, don't focus on the money. Focus only on developing the right habits, processes, rules, and disciplines, and the money will come later. So when I first started trading, first step is I needed to discover who I was as a trader. Was I going to be a swing trader, a scalper, a Momo trader, higher time frame, short time frame? I just didn't know. I had no idea. I wanted the stats and specifically using TraderView, to objectively answer this for me. So in the beginning, when I just started and just went live, I traded large caps, earnings, breaking news. I traded small caps on press releases, in-play names, low RVOL, high RVOL, OTC stocks. I traded everything, long, short, but I traded with very, very small size. And the reason I did this is, great coaching and mentoring from Shark. He said, look, in the beginning, you're going to lose money. You're then going to lose less. You'll then break even. You'll make a little bit, and then you'll grow and things will compound. So when you first start trading, experiment, but trade with small size, because you don't know what you're doing. And I really respected that, because in a sense, he was looking out for me, and he knew that when I finally got it, I didn't want to start off in a big hole. And so during that time, I would say around, that 6-month experimenting, trying everything phase, I would record my screen every day, and every afternoon, every evening, every weekend without fail, I would play it back. I would watch the tape to, of course, speed up the learning curve and deepen my understanding, and also to pick up on small nuances, pockets of liquidity, what it looked like, the stock looked like up there, why it failed up there, could I identify a refresher on the offer. I would also journal every day, still do. Back then, first, I would say 2 years, definitely more in-depth in terms of playbooking every single evening, identifying the best trades I took and the desk took. Weekly reviews, monthly reviews. I also wanted to understand the importance of multiple time frames and how the 5-6 best traders at the time incorporated that into their trading. A lot of traders build stories behind a trade, and they want multiple time frames to align: the 1 minute, the 5 minute, the 15, the hourly, the daily chart. I also wanted to understand different trading indicators that were being used on the desk. Again, when I started, I knew of the Fibonacci, I knew of the moving averages, simple, EMA, but I joined the desk and I noticed that VWAP really stood out, and the understanding and thought behind it just made total sense, and so that's what I stuck with. I also wanted to know how traders incorporated technology into their trading. They're hybrid traders, they are fully automated traders, and then there are traders that use technology just to really complement what they're doing. And so seeing and understanding other people's niche and trading personalities was a big thing. And then I wanted to see what I resonated with, what felt right and felt natural to me and suited my personality. And so after 6 months of trading and experimenting, I looked through all of my stats and I discovered my strengths and weaknesses as a trader. And so after pouring through all of those stats, early on, they told me, again, objectively, that I was showing promise trading lower price stocks. And in particular, these were low floats with higher RVOL on the short side. I then went a little bit deeper and I wanted to know what time of day I was performing the best. And that was during the open, the first hour and a half, and the last 30 minutes of the day, the close. So this information, along with some other insights, was enough to go on in the beginning. So I said to myself, for the next 6 months, I'm only going to focus on getting consistent and developing a deeper understanding for these stocks, the psychology behind the moves, what moves them up, what moves them down, how VWAP can be used as a trading indicator just for trading these stocks, SEC filings, the float, the short interest, and the mechanics. And so that's all I spent my time on for the following 6 months. I also then leverage some of the technology at the firm to supplement and complement my focus for the next 6 months. So I built some market screeners, filters, watch lists. I identified the setups which I performed best in and looked to expand on those playbooks in more detail. I use technology as well every day, pre-market during the day, to alert me to more of those specific setups. And I ensured I was using the best order routes and hotkeys, the layout for speed, rebates, and fills. So really, after discovering what showed promise early on, I then wanted to arm myself and give myself the best possible chance to get consistent and create that first stream of income as a trader. And so the goal I set was, the next 6 months, that's what I wanted to achieve.
Hey Ryan, let me get your feedback on something. What I'm hearing from you for a path to being consistently profitable is, hey, let's build a foundation. Second, let's experiment with different types of setups and trades. Third, let's try and be consistent in our niche. And so I would imagine there are some who eventually will watch this that will say, all right, it's going to take me some time, got it. When I'm building my foundation, since it's going to take me some time to make money, I can coast. When I'm experimenting with different setups, since I don't know which ones I'm actually going to be good at, I can coast. Then when I start to work on my consistency in my niche, I can still coast because I'm not really going to be trading that much size yet, but I'll be a little bit more intense. Having watched you grow, I would suggest that you were very intense during each of those stages.
Absolutely. Very, very intense. No stage is more important than the other. They're all equally important, and they have to be. You just can't slack at all, because with trading, really what you put in is what you're going to get out. And so if you do coast, if you take some time off and it's going to take time, so I'll just kind of roll with it, then it just won't work. If you put in all the time and all the effort, maybe there are a few exceptions around the world, and if you put in as much time as I did, then it's 1 year, 1.5 years. But that is going all in. You need to be all in. So to carry on with that, and I included this, shorting something because it has to, or you think it will go lower, is different than shorting when you have confirmation. For example, lower high, break below VWAP, and the has to, or you think is those are words and language that you want to be careful of in your trading early on. A stock doesn't have to do anything, and it's just important to remember that. And if you have no edge one day, or you don't see your setups in a day, then you don't need to trade. Again, you got to treat trading like it's your business, your small business, hopefully a large business one day. And so you want to treat it with that respect. And so when that would happen to me, I would either size down if I thought it was a subpar B-ish setup, or I just wouldn't trade. I would focus on technology. I would focus on building out more in-depth playbooks, just as examples. Risk management, risk management, risk management. If a trade wouldn't work, if my gut told me it would not work, then I would get out because I could always get back in. And sometimes you don't have to wait to get stopped out. And so that's something that I saw some of the senior traders doing in kind of my first year. They would say I'm wrong at $3, I'm shorting it at $2.75, but they would see something on the tape, or the trade didn't work as quickly as they thought it should have, and so they would just get out because you can always get back in. Listen to the stock, respect the price action. Price action is king, and if you pick up on a small nuance, then you don't always have to get stopped out because you can always get back in. And if you listen to your gut, which is usually right, it could save you quite a bit of money. I would initially enter with more size, and this is something I did in order to size up a little bit quicker, as it was a challenge for me. Initially, I entered with more size, and as the trade worked, I would take that extra size off. So in doing so, I would cover some risk, lock in some profit, and I would hold the rest as planned, really until I had a reason to exit or the target was reached. And so entering with more size than perhaps you're comfortable with could be a strategy that may help and come to fruition and pay fruition in the future. Just something to think about. That's something that works for me. I only wanted to make superior risk-reward trades in the beginning. So now that I have more stats, sometimes I'll take 1.5 to 1 risk-reward trades because I know that that trade has a higher probability of working. For example, 80+% probability of working. But in the beginning, I didn't have those stats to back it up. And so I would only look for the 3 to 1 really minimum risk-reward. I also collaborated with traders at the firm who were successful in trading these stocks. That alone will speed up the learning curve. I followed people on Twitter who were successful and had knowledge of these stocks. I asked them questions. I looked at all major runners in the last 2 years and I studied their moves, the technicals and the fundamentals of each one. And then I began sizing up. And the goal was now to make a living from trading low floats. Again, my first stream of income as a trader. So achieving consistency. So by the end of 17, I was achieving consistency in my trading. And that's when my mentor said to me, all right, now we can really size you up because you've earned it. You've proved that you know how to trade. It's no longer gambling or experimenting. You are running a successful mini business, and now we can size you up. So each day I would ask myself, and I would review in real time at the end of the day while I was trying to size up, where could I have made more? Where could I have been bigger? And sizing up is challenging for some. So I decided the way I would do it is I would risk 1% of my stop on particular trades. And therefore, as my risk increased, the percent of risk would always stay the same. So if you go from, for example, $1,000 of risk to $2,000 of risk, but you're risking the same percent, then it just stays the same percent, and things really happen naturally. And that's just a little mind game I play with myself, but it helps. I also removed P&L from my screen and I replaced it with cents per share up or down in the trade. Therefore, I just, I don't trade my P&L. Of course, you can work it out. It's another little trick to play with yourself, but it works for me, and I see a lot of other traders do this too. Collaborate with other traders. They have already been through everything that you are going through. They have experienced the challenges, the ups and the downs, and so collaborate with them. If you have ideas, contribute with those traders, and they'll be happy to share even more information with you.
again, while I was achieving my consistency, then I began expanding my playbooks, which now include long setups, short swing setups. And through 18 to now, I constantly build, review, and expand my playbooks, which really now includes all types of stocks and strategies, from short or long small caps to OTC, long or short, to large caps, earnings, breaking news, breakouts in terms of technical breakouts, imbalances, market plays, just to name a few. But again, you want to focus in the beginning on, I wouldn't say perfecting, because as a trader, you're always adapting and changing, but focusing on one niche and use those skills developed on that one niche, leverage them to something that applies. So from shorting low floats to shorting overextended IPOs, and leverage those skills in shorting and reading the tape, and constantly add a new stream over time. And just to end off some of the books that I really loved and still read, in the beginning it helped a lot. These are them. One that was actually gifted to me by Bella, which probably one of my favorite books now, if not my favorite, is Atomic Habits by James Clear. Reminiscences of a Stock Operator. It's just brilliant. Market Wizards, One Good Trade in the Playbook. How Charts Can Help You in the Stock Market. Great book just for identifying different chart setups, bull flags, bear flags, etc. All of Dr. Steenbarger's books, must read. Chat with Traders podcast, Trading in the Zone, and Think and Grow Rich. When you begin finding your consistency and profitability, that's a book that can really help you coach yourself, your inner voice, your mindset to think bigger and really visualize yourself as that successful trader.
So you've been through it all now in terms of going from new trader to consistently profitable trader and sizing up from there. What was, I'm sure you had some preconceived notions about how long it would take and how hard it might be. Looking back at your start now and your journey now, what was the most surprising thing to you that was the hardest thing for you in becoming consistently profitable?
Oh, that's a tough question, and one I haven't thought too much about in the past. To start off with, I did not think trading was going to be as challenging and difficult as it was in the beginning. I had no idea. And I also didn't, I would say the biggest challenge and something that's turned into a strength is how important psychology is in trading with yourself, with what moves stocks. That was something I underestimated completely. And the third one I'd say is sizing up. That has been my biggest challenge. Sizing up, I never thought it would be as difficult as it was. Again, psychology plays into that. But that was definitely a big challenge, and still is, because, you know, as traders, we're always growing and we always want to be bigger and more successful. But certainly in the beginning, that was the biggest challenge.
Do you ever think about why sizing is particularly challenging for you? Do you ever think about maybe your childhood, your earlier years, just some innate skills about yourself, some innate personality traits that causes sizing up to be a touch more difficult for you?
Definitely. I think naturally I'm quite a conservative person when it comes to risk. And so, I mean, that's why with my P&L curve, it's kind of straight up, because I manage my risk very well. But on the flip side of that comes taking larger risk. And with that, obviously, could come larger losses. And so in terms of my, growing up, I don't know where that stems from, but definitely has something quite important to do with it. There's obviously fear involved of going in big on a particular trade, it not working, and seeing that 3, 4, 5 times larger than usual loss on the screen, which is just, you know, a scary thought. But having been through it, and it's part of growth and it's part of consistency. You have to feel that pain. But coming into trading, I was very conservative, and I think that is why it took quite some time for me to size up until I had experienced those 3 or 4 or 5 big losses, come to terms with it, felt the pain. You know, like you said to me the one day, you know, it's about 2 years ago, you experienced that loss. It's good. When you wake up, the world's still going to be here. You're still going to be here. You're still going to be able to trade, because I was just scared of taking those big losses. But it was vital in order to grow and become the trader that I am now.
I remember that. I also appreciate that. I would suggest that you're also very diligent and responsible, and those are positives on your personality which lend to you being careful and responsible with firm capital, and not everybody at the firm is like that. We had a conversation with the trader the other day who Carlton and I had a chat with, our floor manager and I had a chat with, who had run into an unfortunate 6-figure loss. And it was unfortunate, and the trade was fine. Maybe the sizing was a little bit big. But the trader, part of the strength maybe to the trader was he wasn't in any way frazzled by the loss at all. And that was a little surprising to me. But the negative side maybe to that is that, maybe he could have been more diligent in choosing a sizing, which would have kept him out of that situation. So good for us to recognize what our personality traits are and where we come from.
I was going to just say, it's interesting because for that trader, and I'm pretty sure I know who he's speaking of, but that's besides the point. For that trader, that loss has almost become like when you first start out and you take a big loss, low 5-figure loss. And that's probably what it feels like for him now, where it's fine. Tomorrow I'll bounce back, or it's.
I will actually say it isn't the trader that you're thinking of. It's a different trader. That trader can handle those losses.
Exactly.
The one you're thinking of, that trader is fine taking those type of losses. This was somebody perhaps in a different income bracket than the trader you're thinking of.
Yeah, you can. But the point I was making is that 2 years ago, the loss that, for example, when we had that discussion about is now just a regular. If I have a red day in a week, that's sort of the regular red day that I'll have, and it's you almost become numb to those numbers over time as you continue to grow, and so it's quite fascinating how that all works from a psychological standpoint.
Hey, go ahead and click our subscribe button so you don't miss any of the videos they were producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.